Hey everyone, welcome back. If you've been feeling a bit frustrated with XRP's price action lately, you're definitely not alone. The token has been trading under $3 for over a week now, caught in a broader bearish trend. But here's some news that might change your perspective. A prominent analyst is now saying that this weeks-long corrective phase might finally be over, and XRP could be warming up for its next major rally. The specific target? As high as $4.39. So, let's dive into this technical analysis and see what evidence is being presented. The analyst leading this bullish charge is Dark Defender. In his latest chart update, he explains that XRP is following a classic 5-wave Elliott wave structure on the daily time frame. For those unfamiliar, Elliott wave theory is a form of technical analysis that identifies recurring wave patterns in market cycles. According to his analysis, XRP has completed its fourth wave correction. This is significant because in this theory, the fourth wave is typically a corrective, cooling-off period that sets the stage for a strong fifth wave advance, the final powerful push upward. This correction in question refers to XRP's decline from its July peak. You might remember the token soared above $3.66 in the final weeks of that month. Since then, it's been a bumpy ride down, establishing a low of $2.697 on September 1st. That's a dip of over 26% from its high. However, Dark Defender suggests that the risk of making new lows is now diminished. At the time of his analysis, XRP had slightly rebounded above $2.85. Based on his Fibonacci projections, this expected fifth wave rebound could now send XRP as high as $4.39. But, and this is a crucial point, this bullish outlook is entirely dependent on one key condition. XRP must hold a specific support level. Dark Defender stressed that the $2.85 support level is absolutely key. This zone represents the 23.6% Fibonacci retracement of the recent rally and has acted as an important pivot point in past price action. His statement is clear. As long as XRP does not close decisively below this $2.85 level, the Elliott wave structure remains intact, keeping that $4.39 target firmly in play. This projection comes at a time of mixed sentiment within the XRP community. While some long-term holders have openly expressed frustration with the token's slow progress, other analysts are joining Dark Defender in highlighting bullish technical setups. For instance, analyst XRP recently shared 3 key factors supporting the view that the bull run isn't over. First, he noted that XRP's monthly candle formations remain strong and intact. Second, the price continues to hold above key Fibonacci support levels, with $1.99 acting as a solid base. Third, and importantly, XRP remains above the 21 exponential moving average, EMA, which is a crucial indicator for sustaining long-term momentum. XRP maintains that unless these technical structures break, the bull run is not over. He has his own set of targets, expecting XRP to reach $3.90 soon, with much longer-term ambitions of $9, $18, $23, and even $46. Beyond the charts, there are also some fundamental factors keeping proponents optimistic. The most widely discussed one is the potential approval of XRP exchange-traded funds, ETFs. A decision from the U.S. Securities and Exchange Commission, SEC, is due next month. The excitement around this is huge. Industry leaders, including Canary Capital CEO Stephen McClurg, have stated that these products could attract up to $5 billion in inflows in their very first month. Based on this optimism, some community members are calling for XRP prices to eventually exceed $10. So what's the critical takeaway? On one hand, technical analysts like Dark Defender and XRP are providing data-driven reasons for a potential rebound, pointing to completed corrective waves and strong support levels. The immediate target of $4.39 is a realistic and measurable goal if the structure holds. On the other hand, the market is still susceptible to broader sentiment and news. The entire thesis relies on XRP holding that $2.85 support. A break below could invalidate the wave count and lead to further downside. While the technical setup is promising, it's always wise to remember that these patterns are probabilistic, not guaranteed. The upcoming SEC decision on ETFs will also be a major fundamental catalyst that could override technicals in the short term. What do you think? Do you believe the correction is over and Wave 5 is starting? Or are you waiting for a break above key resistance? Let me know your thoughts in the comments below. If you enjoyed this balanced breakdown, please give the video a like and subscribe for more. Thanks for watching.